Good morning, all. This is Fari Hemsey. It's Monday, about 8:45 a.m. on 12th of October, uh, 2020. This Thursday, we're going to have a special. We will do it differently than normal. We will send an invite out now for the link itself. We'll give you a deep discount on PMT. It's a 5-year anniversary of PMT. And it was on October 15th, where we started tad early, but we had some issues day or two. Uh, but Nancy Scott, our air boss, kicked in and fixed them up. Some of the presentation stuff we wanted to do, and build our charts there rather than having in a massive email go out, and sometimes some people wouldn't get it. So we made it really, really online. So October 15th on Thursday, but we will only send the email out. I mean the link out to those who email us. So we'll put something together. The second more important, I think, announcement is that Captain Stephanie Alexander has honored us to join our team as a reviewer of my text and also some of the emails for PMT. She's an avid user of PMT over the years. Make sure that given the growing pains we're going through right now, I have an extra fresh set of eyes on target, as you will, if you will, and she's in the same time zone as we are, and so with her help and Nancy helping out there, we'll make sure we don't have gaps in what we're posting on the online. We want the emails match those in a chronological order. We kept it up, but since March, things have been pretty hectic here, as you can tell. The problem is time of digest. Once you rank up there with such a big margin, it's just Friday night I wrapped up here, or was it Thursday? That was bad. I don't know what time. It was just late. I mean, 7 o'clock. I'm still on phones on Friday. That's uncalled for, but it is how it is. So, they said it's a time and money, right? Those who have time don't have money. Those who have money don't have time. So, it's just been a different journey the last 6 months. Anyhow. All right. Last night we made a bias change with Timer Digest. This morning we got confirmed. So let me just quickly share that while you're looking at timer chart there. This is how our system works. We need to get a confirm back from them. They have their own directory here. The emails go into a different directory. And there you go. There you go. We send a notice out. There's a timestamp there. They respond. They record as of the last known SPX. Those are the rules. And so once they give that, then we're officially long. Okay. Now, so we didn't miss that issue. There's an issue today. We will share that with you guys when the issue appears. It should be late tonight. I don't expect anything different. Here's the hotline on Saturday. The hotline is done Saturdays, and here's the hotline on Saturday. And they wanted me to have an update. I didn't get a chance. Actually, early Saturday, Tico wasn't doing good. And here's the update. Mark is still short. Mark Rose, very excellent competitor. Pretty good guy up there. Peter Lydes, different story. He's a good guy, of course, very good guy. A Greek guy from Santa Rosa area. I hope his home his ranch up there is safe. But he's a perma bear. Yeah. I'm surprised actually. I don't know about Dan Truoff, Mark Young. Yeah, he's used some of our stuff. These other guys are so. Yeah. Nice report. Anyhow, I don't know Clinto. Yeah, no idea. Anyhow, the issue is our separation. How far I'm above Mark, with 2 months to go. If we do okay, given that we were number one for 8 years from 2010 2018, if I do okay, I should be called the timer of the decade, and it'll be an honor for myself and my team. Moving forward. Okay, we're at 2 sigma plus area. We're up right now another 25 handles. Again, it's puzzling us what the market is pricing in and moving forward. But if you can't beat them, you better join them. And so, actually, if I look at our P&L, which we do through the worksheet here. Again, for the sake of transparency, as you know, that's my middle name. We keep track of everything. Hold on one second. Hold on. And so, actually, we haven't done too good last few months because of chaos. Yeah. The directional move was done. This was the killer from from Feb into March 23rd. Nailed the day. Admiral Tico nailed the day. A spring equinox, which was a Friday. That low was put in on the YM at his level, 18,000. The election night in 2016. So this erased the gain. It was 18086 on the YM, the Dow futures on that Sunday night, fateful Sunday night, and we immediately went long. We dropped a tad Monday, a tad versus Friday. You can't. They won't give you a fill on the Friday. I mean Sunday afternoon or Sunday evening. It has to be a last known SPX trade. So they give us Monday night fill, which is slightly lower, but not as low of intraday low of Sunday. So it was over 18,086, but this was 11,000 point drop in the Dow. We were off by 86 points. I think that Advotico did okay. And then caught the V bottom, and that's where these two get added up. That's the only way this would go if you catch the bottom. Okay. Here right now we're not. We're having a lot of noise. So is SPX. This is buy and hold. So we're long from 34.77 as of they're giving us Friday close, obviously, because today close we don't have. It went out last night, so and we have given back some here. Of course, this number will be a little bit higher, but I had to put a date in for mark to market. So tentatively, we don't know where we're going to close. That's mark to market, but that's where we are. Okay. At one point, we were up 147. That's what made a difference. Yeah, we're not there. We've given some back. Why? Got sausage. There we go. Okay. Yeah, we're long. The market goes short. We're short. The market goes up. It's not that directional yet. So keep that in mind. We're about 3,500. We have hold on. We have hit 3,500 even. Ooh, are we? Okay. So interesting days ahead. All right. It could be also interpreted that vol was not going to be as bad as you think. Okay. It could be. I'm not going to get into that because then we're entering politics. That's not our business here. Even though politics has some input here, but I'll keep that to myself. Okay. Yeah. We'll see. We're a little bit overbought, but not uber overbought. This should hit about 250 when I would start getting worried, but at least over 150, and it could remain there. This is a McClellan oscillator, S&P 500, not S&P 500, all of NYC, advanced decline, and so up there you could sit up there. Unlike the bottoms where you have a lot of V bottoms, and they're sharp, the tops are not. So this is the all-time high, 35.88. At this point, you've got to say to yourself that that's a huge magnet up there. And as we move up, the sigma levels will go up. That's a 3 sigma. We could get close to it. If we cannot hit 3 sigma, we're not going there. I'm sorry, let's say 2.5, because index trades negatively more than upside, law of averages. But we'll have other tools we're going to get in there. Take a look. Here's NASDAQ. NASDAQ should lead, and it is leading. So we'll keep track on that. Canaries, this was one of the reasons. We talked about this last few weeks. By the way, those who did not get into talk, this is important for me. I'm not getting off the subject, no. We recorded a number of issues on GoToMeeting. A little bit more difficult to manage because you have to switch out of systems. But today we were lucky we could immediately record on Skype. Both cases we post. We'll try to post a little bit early. Some days we get sidetracked and we forget when to post until it's a little bit later. But here's the DT I want to go into, DTrender. This is what I talked about. If transmission starts pulling up, especially, it was 2 years since it made a new high. Okay, this was 2 years back. August 2018 was the last new high for all-time high for transportation. We got over that, so this tells me we were coming. This was a breakout, that bar. And the two other ones were questionable, but this was a solid one. So technically, I'm 2 days late. I understand that. But This was really the solid bar. The other two, look at the type of bar you have. You gotta read the tea leaves. Probably best thing I did was that I had a show. I was in a show. My next door booth was Steve Nissen of Candlestick fame, patterns, Candlestick patterns fame, and he autographed a copy of his book for me. And I think it was in Chicago. Anyhow, I started really diving into what this was going on with these charts. Not what the candles are, but what the pattern, what a single bar means, and what a pattern of a few bars mean. You can't go too far back, but you can look at 2, 3, and then you have what do you call not a confluence, a cluster. Well, it's a cluster analysis. What are the few bars means? Assuming, for example, like this. Remember, market comes in like that. Well, how do you interpret that as the bar comes in? So transpiration is up, making new high. Risk on, risk off is on, but not uber on yet. It has to take 1742. So if I were you on my machine, I would flag that. I put a 1742 or 1740, I would say, as an early warning, and then the second alarm, like if you got 1742. When the first one hits, turn it off. Then you're ready for the second one. Change the sound. You can do it on TradeStation, so it's not the same as your other alarms. This is key. This will dictate for Nasdaq to really take off. These two go together. These two go together. Okay. So this is future economy, not it's the future of our economy, not future economy. Sorry, future of our economy, and this looks positive. What is going on here? Maybe it's going to be a sweep. I don't know. Democrats, if you look at over the years, Democrat returns of the stock market has been better than Republicans. So those are not my opinions. None of these are my opinions. These are stated facts. Just you have to download data, take a look at it. Maybe that's what's trying to say. I have no idea. Goldman Sachs came up with a report saying that Biden plan would be great for the economy, but remember, Goldman has his own bias too. We all have our bias, so filter something there, okay? But look at sources and make sure they're reliable. Make sure they also give you corrections. If a website does not support reports of corrections, they're not good. Or a newspaper, yeah. If you're wrong, you're wrong. You have to admit it before they read in the newspaper. So, and you move on. SP1 Momo, okay. I love it right there. Once it gets to that level, here's unit 2 or 3. Again, cluster analysis. A few conditions. Walls are opening up. How do you tell? Look at how it's like a shark opening his mouth. Okay, all of a sudden, the walls, the Bollinger Bands, Sigma channels, whatever you want to call it, Bijan bands, as they open up, and then we get into that channel, then it breaks out of the channel. Channels are +1, +2 on the upside, -1, -2 on the downside. Okay, so it gets in there, and the walls are opening up. The edge of the 3, +3 and -3 are really opening up, and you're in the channel +1, +2. In this case, you jump over that, it's above +2. Okay? You couldn't ask for better signaling this. If you ignore this, then you're trading at your own peril. And so I look at that last couple of days. I think it's coming. And I said, this is it. Wait for confirmation. I had a call from Trade Time Digest saying, hey, when are you going to send your note in? I said, I got Admiral. He's been sick. I'm taking him for a walk. I'll have to do it when the future is open. I'm not going to do it before the future is open. And I expected a downside. It did pull down. We're going to go over that a bit, and then they bought it. And so, boom. Again, I think there was a comment, another walk back from White House that said, we want a bigger, what do you call it, stimulus package. Keep in mind, this is the biggest thing right now. Really, I hate to say it, but this is what's moving the market. The good news or bad news about a stimulus. And so, unfortunately, you have to become a politics junkie and keep a track of that on the news service that you have or whoever else you get your news. I would stay away from social media unless it's an article that's posted by major news service. But the Bow folks with the Bow websites or bogus Twitter handles, that's not the way to look at it. But I would look for where that conversation goes, more than even the earnings season we're in and our economic calendar. Oh, we forgot our economic calendar. We'll come back. Here's your SQ. SQ pulled up a tad. Oh, I'm sorry. Come back here 1 second. We are not at 10 yet, so we got a little bit more room. We could go a little bit above it. Although on the downside, we go a lot lower times. Okay, look at that. This is the March equinox or spring equinox low on Momo. It's essential to see at key points how this thing behaved. Okay, any indicator. That's how I keep in my mind. Where are we? What's the signal? What the indicators did? And it's called what I call accumulative learning. You're not going to learn in 1 day because you see a constant. 1 day is a constant. If you think about it, 1 day right there, it's a constant. For that day, it's a constant texture. What you need is a change in texture and change in indicator. That combo, it says we're not topping yet. We got a little bit more to go, and this one is just getting some excited on the upside. My guess is we're going to go on the have a rendezvous with 3588. So let's say 3600. If it gets to 3588, 3600 is a lock on. That's it. Above that, I don't know. We'll see where we are. Given the time left in the vertical calendar, given where we are with earnings season, uh, minor issue could be environment. That is the hurricane season. Um, Oil is as important as it used to be. So the Gulf states are the impact on them are less impact on our markets, but hopefully, but what's important also their lives. So we shall see. SQ, we pull up a tad. We were negative 2 sigma right there. There's a 2 sigma line. Again, what sigma does, it measures an indices, an index, and indices. Yeah, an indices. Yeah, an index or the indices against itself. And remember, the problem get a little jagged here because this is not solvable for every day. Used to be before, but I think they've got realized that they have to do it a little bit, fine tune it better. This is the out of the money tail risk for SPX, the big options, not SPY, the big options, which is the domain of the big boys. And right now it says they're not putting any more, any more. They're not buying any more put options. I think they're pretty happy what they got so far. That was not the case up here, and you saw what happened there. Initially, this was a setup, and this has to do a lot with SoftBank going stupid or insane with those short calls. They had to cover with buying their FANG, and that's what happened. Because there was no economic data to justify this. So, and COVID data was just getting worse. So, and then one day, people figure out what SoftBank is doing, and boom, game changes. Now we're going back. We're going to challenge that. All right. VIX and VXN, you can see what's happening there. This is Russell. That's kicked down. We're at negative 2 sigma on VX. Actually, 3 sigma on VXN. We're close. Once we hit somewhere in this area, that's it, 21 on the VX, I think be ready for near the topping of this move. Okay. So I don't expect the position we have is going to be very long. I'm going to take a shorter duration on the options, okay, today. Midday-ish type, so. All right, still haven't done anything here because I worked on a Z20. We have made some changes. The rate files changed. I can't get into the detail of it because that's classified. And last time I checked, none of you guys had Q clearance. Okay, so but we did have to make some changes. It was very little, if to zero on the small blocks, but everything else was slightly changed. I think there's one I have to take a look quickly here. I'll do it before we go to a trade mode. Okay, right now it's presentation mode. Okay, SP2, again, that also says we're not overbought yet, but we're entering that area. So we have to be more vigilant. I know we're going to turn here, but I just don't want to give up anymore. Once this channel, see that channel right there, that area, once that little tiny area there was broken up, I had to take the other side because it's risk management. You just can't sit there. And these are big momentum names. This is 500 names of biggest names in S&P, NYC, some Nasdaq, representing approximately 80% of U.S. equities. This is a carrier. This is a carrier task force. When it moves, it moves. It's not easy. Well, I mean, once it's confused for a while. Once it makes a move, it's not a joke. And our line in the sand was this channel there. Once that channel broke out, and you give it a little bit of room above to be sure that it's moving. It's like a buy stop. Above what your target is. Never put your buy stop at the level that it was shooting for. You want to put a little bit above that. So it's another filter, man-made, another filter right there. Once it does that, you got to catch up, and then of course it went boom, boom, 2 days. Um, so we had to do something. We gave back some. I understand. Well, remember we had that 147% margin over S&P in 5 years. That's not a joke. It's like beating S&P by 30%. 5 years in a row, not compounded, but a straight line. So, uh, yeah, it's a few shekels there. So we worked hard in March and May. I'm sorry, March and April, but the result was actually the research I did in late January, and then the positions were established in 12th of February. That was the killer. Yeah. Why everybody was hunky dory, they were going to go higher. Yeah. Yeah. Oh, the cigar club I'm a member of, they made fun of me. We shall see who will laugh all the way to the bank. Yeah. It's okay. It's okay. Uh, Not a problem. I'm not worried about uh, the stress issues or people disagreeing with you. You just have to have that self confidence to stay steady in your course. So it's just like Admiral Tico aboard the SSPN 731. Look it up. SS, that's Sierra Bravo November 731. That's his ship. And when he runs that ship, it's a tough kid. Yeah. That's why he's the Admiral, and you and I are not. Yeah. Anyhow, 74 there. We're pulling up. Once these three team up, it's just like a formation, aircraft formation. When they team up, yeah, we got events. We're not there yet. Up or down. This was an event down here too. So we're not there yet. It's three stock RSIs which I programmed, but the indicator is not mine. The indicator belongs to Tushar Chandy. That actually was the tool that told me why we need CI. There's a gap in the data in the indicator market, and I went and filled it. Except that little I knew that was going to take me better part of 18 months and a little testing after that. So that's what CI came in. So, but I've been watching it. It's a good one. We programmed it and we put it in our happy indicators. Jeff Pierce, are you here? I want to make sure he is. Okay. He We sent him the code. I don't know if he put it in properly or not, but Nancy, you might want to keep an eye on Jeff Pierce on the V2. I'm sorry, on the software key. Moving forward, 909. We gotta get rid of these. This is too far up, the 7 year and all that. But you can see where we are. This is the yields. Yeah, I'll redo this for tomorrow. I got to think about this, but this is the yield, the all-time yield for the period we're looking back. I think it's 7 years we're looking back. Let's see. Yeah, 7 years. So, yeah, it's just given where we are now. Well, maybe we should go to 3. I mean, things have changed so much. Um, Let me see what quickly here. That the 7 year was a good period to look back as just it's fiction, to put it mildly. I mean, we're at a different threshold on debt. Yeah, you could see. Okay. Now we got a little bit opening. Still, this is horrible. Is this let me take a look quickly. Yeah, I went to 3 years back. Yeah. Let's go to 2 years back. Let's see. Yeah, you can still see that's way up there. Huh. All right. But that's where we are. We're edged up a tad. What's important is a 10 year. And let's cross our finger that we don't get debased on dollar. And also, at some point at this era, we're going to get one of these rating agencies not to make the mistake they did in the subprime, and go back and look at our paper in overall. They've been doing some of the different sovereign currencies. We got to see what they do with dollar. I notice we're under watch, but we'll see. If that changes, you're going to see these things shoot up, and you're going to see real assets try to respond. Except nobody's maybe qualified to buy them. Yeah, real estate has been tough down here, from what I hear. All right, moving forward, one more chart here, and then I'm going to come back and deal with economic data, which I missed. We usually start with that. I have a checklist in front of me. Okay. We did go through our 70 line we talked about during the last week webinars. We're near 75. I believe we will cross that tonight. And then the next target is 80. I don't know if we're going to get to 85 or not, but I think this journey from 80 to 85, this is percentage. We're at 741. It's going to be key. And again, we talked about that. Remember, we said here's how you see it. This is called experience. Watching it day in, day out over years and years. I watch this indicator once a day, twice a day, not intradays after the close. Maybe before exercise and then after dinner. How it's not what this number is. It's how these. For noise reduction, we use moving averages, and as you know, we're going to be out of cycle. I'm saying out of phase by half the cycle. So the 20 is 10 days behind, and 50 is 25 days behind, almost a month. Look what it is. That's a kiss, not a cross. This was a cross. This was another kiss. This is a very much tighter kiss. So now the forecast was right. We're going to show up a little bit higher. I thought we were going to stop, but the last couple of days, remember, it's a little bit late. This came in and said, hey, I think we're going to go higher. Once everything's lined up, including what Transmission was doing, you can't trade on one indicator. That's how you get into trouble. I've learned that over the years. So it's a preponderance of evidence, and that's why we have 5, 6 charts all there. We'll get charts up there too on PMT. We have to. Where we're behind, we're not going to be behind anymore. I'm making some changes here at the website with the help of our team, and we're going to be doing. I'll free up my time even more, so I can come back to what I was doing. I don't want to do any new product. I don't want to do any changes, but I want to do what we were doing properly. We got a little bit pushed to the side because we were just so busy, and that's a good problem to have until it starts impacting other things, and that's what we're going to regroup now. Okay, we have a tremendous 2 or 3 months in front of us, and so we need hands-on with all members. Earnings season starts tomorrow at JPM. I'm going to try to see if I can trade that, and then with the help of Mark and Mark. By the way, Mark Esposito is coming back to the option room to also help us out a little bit, and so we're going to have a team there that's wonderful. Okay. Mark Zavid, option trade. Okay, let's go here. We have nothing here right now. Cash is Monday. Kashkari is speaking from Minneapolis. CPI tomorrow I want to pay attention to. Although I don't think there's any reason to be anywhere because of demand. Yeah, it's going to be muted. The annual year to year, yeah, it's below market. Below 2% that the Fed wants to see. So we'll keep an eye on that. PPI on Wednesday, that's another one I want to look at. Remember, what's important is the red reports, okay? Jobless claims, crucial. This Friday, we'll be running about 800,000. And that's really what we have to keep in mind with the non-farm payroll. We gained 661,000 in the month, and we lost 3.2. We've been running about 800,000 4 weeks in a row. That's 3.2. That's why this job market is upside down. But nobody talks about it. And these are government numbers. Okay, so read the tea leaves, dig into the data. We got Steely Fed coming up. I would also pay attention to Empire State. That's New York. I'm not sure about that. Import export. EIA is there also. Nat gas, and then why the EIA is not there? This doesn't make sense. It's not a 3-day weekend. I mean, yeah, there should be. This is, I think, is a mistake. This should be on Tuesday, Wednesday. The petroleum, not gas, is on Friday at Wednesday. Let me see. I'm sorry, Thursday. Retail sales is going to be huge. Industrial production. So that's what Friday this week looks like. Of course, I would always want to see what consumer sentiment has for us, and it's a year of Michigan. So what are we looking at? 80.6 as consensus. A tad up. Okay. I don't want this to go too far up too fast. That's how we get into trouble. So if the market want to go up and we're long, obviously we want to be steady with a slight positive slope. Okay. Not the econ guy, I'm not, but there's a book. I missed my biggest day in the bond market, which I got whipped, was a day 2 or day 3 of bond futures, which I didn't know what non-farm payroll was. I was a schmuck. If you open the Yiddish uh, dictionary, you look under schmuck, you see my picture. Still there from those days, yeah, about 25 years ago. I forced myself to go understand the economic calendar and look at the key reports and read about it. There's actually a book called How Investors Read the U.S. Economic Health, and it goes through what these things mean and how you have to behave and all that. If you trade in a big desk, let's say New York or Connecticut, what have you, and the bond section watches this like hawk, and then like head of the bond desk would get up and give analysis immediately in real time what that meant. So it's a key thing. I had a few friends as contacts. I would go to them, but yeah, they were semi-retired. Like Bob Kleinert. Boom, he was with Solly. Yeah, but he was one of the sales guys. But he would get me the right person, the analyst, to talk to. I forgot there was a Marsha something at Prudential. I forgot her last name. She's with RBC, I think, Royal Bank of Canada. And through Ralph Camporo, I met her, and I would call in right after this, obviously after CNBC slot, that they would have a hit on CNBC after that, and she would give me in 50 words or less, as she would put it, the analysis. All right, so good luck at Econ Calendar. We've got to PMT. Let's move on quickly. It's 9:18. We don't have a lot of time. I've got stretched here. Let's go to overnight. Okay. Here we go. Overnight, what do we do? Okay, that's where we are now. 209 points, 210 points. Better yet, 1.8%. Here's point 0.7. Again, lead is good. This has to lead. That's a confirmation that the growth is there. We hit 3,500 even on the print for the Z20. And these are by design to be 15 minutes to kind of give us the review of overnight when we open in the morning. I usually close it during the day. I don't need to look at it during the day. Murray. Okay, we got to add a couple of lines here. This is EVB's special Excel Plus. This did not change either. This is Friday and Thursday. Give us a 2-day again at 15 minutes. Quickly, this is really what we need. 5 minutes. We need this. ATR is around 11. Obviously, it's going to spike up during the first. This is 14 look back, so 70 minutes. 14 times 5. So during the 70 minutes, it'll spike up. By the time we are at 11 o'clock, yeah, would that be this? No. By the time IB is closed, 10 minutes after that, by 11, let's say 10:45. But 10:45, this becomes really a natural number to pay attention to even more. I'm using 1 to 1.5 ATR. Some pushers cannot afford that. Trade NQ. Let me say trade MNQ. Yeah. And reduce the size you're doing on NQ. You just have to. So that's really elevated times in ATR. You just have to accept that. Excuse me. DMZ, nice move up. It's pulled down. And if we cannot get through the red line, I think we'll give back some. That's what this part of DMZ is telling us. Reason is we just pull up so much. Look at comparison to to ES. 0.7 versus 177. Remember, moves are in percentages. Okay. We will do a webinar on this. Just quick comment there, Raiders. This we're going to do a webinar on. We're going to do a PMT webinar quickly, and then I don't know when, maybe Wednesday, and then Nick, as I mentioned, we have mentioned in the last few webinar, the morning briefs, and then I got to finish this one. There's a coloring issue I need to finish. Get this done, but again, unfortunately, priority: Admiral Tico Health, OTF fractals, and not DMZ. That's my order of things. And some folks are throwing me at new ideas and want to do this or that. Hold on to your ideas. I'm not good at being prompted. Let me catch up. I feel good about where we are, and then we can move forward. But once this is done, we do a webinar. It's gonna be our first one ever. Radar screen webinar. Okay, we have never done that. Reason is radar screen has improved and it doesn't lag the chart. When it was lagging the chart, you couldn't rely upon it. One says go, one goes up, one goes down. How are you going to trade? Not in that business. Overall OTF changes were done. I'm going to take a look at this in detail. I will. These two already changed slightly. Some of the weights. There was no impact on small. There was no impact on XL either. For the so far the data of Z20, remember the December contract always has an issue because right after it gets lead, you have a Jewish high holidays. So between Rosh Hashanah to Yom Kippur, the Kippur Day, and so because of that, we're getting a kind of noisy data set to look at. So either you have to make a decision and cross your finger and go, which is that's not me, or you have to wait for to get additional data. But we put it through a grinder over the weekend, and that's where we are. I just have to take a look at medium. I just want to make sure that my data matches that. So we'll take this off for a few seconds. Let me wrap up here because we got to jump. Thank you very much.